In Dixon, Illinois, from the period of 1990 to 2012, Rita Crundwell was basically everything. She was the treasurer for Dixon, Illinois. And the treasurer in Dixon, Illinois meant you basically did everything. You collected invoices from contractors and from people, and then you wrote those checks, you signed those checks, you did the bank reconciliation, which we'll cover later, but that basically means that you look at the bank account and make sure that all the money's there that's supposed to be. And so she was one person in charge of all of that. And no one really checked up on what she was doing. And that's just the way Dixon worked. It's a small town. Basically one accountant to do all of the jobs. And over the course of 20 years, she stole $53 million. And that is because she was in charge of everything. It made it very easy for her to steal that amount of money without anyone noticing. So, the main failing of the city of Dixon in this case is that they had one person in charge of everything and no one checked up on her. What they really needed to do was have a separation of duties. And for this to work, you basically need two people. Later on, we'll say, well, what if you can only afford one person? And we'll get to that one. What can you do if you only have one person? And Dixon could only afford one person. So we'll look at, well, what are some other things that you can do? But separation of duties will stop a lot of fraud and embezzlement because we have two people in charge of the process. One person, we'll say, is like the accountant. This could be the accounts payable clerk, someone in charge of the money, or in charge of the records, I should say, not the money. So they're in charge of the records. The other person is in charge of the assets or the cash. So they could be in charge of cash. They can be in charge of signing checks, something like that. The accountant or the person over here on the left never touches the cash, never signs checks. They're just in charge of the records. So imagine this person, the accountant, goes into the computer system. They get an invoice from a contractor, and we need to pay this invoice. Let's say the invoice is for $1,500. And so the accountant puts this into the system, and that means they can probably go print the check, but they don't have the authority to sign the check. So for this check to get signed, they have to go give it to somebody that has authority to sign the checks. So again, banks do check these things, and so they might try to forge their signature, but then we get into other things, right? So the accountant prints off the check, but they don't have the authority to sign it. All signatures have to go to this other person. So this other person signs the check and then mails it. Now, what does this prevent, this sort of system, having one person in charge of the records and another person in charge of the assets? Well, the accountant cannot write a check to themselves because, well, they can't sign it and they give it over to this other person, and this person would probably realize that, hey, why is this check being written to the accountant? And so they won't sign a check like that. So it stops the accountant from writing a check to themselves. Also, this person over here can't write a check to themselves because they don't have access to the computer system to do that. So they don't have access to the checks, the computer system, or anything like that. and so they can't actually write a check to themselves. Also, when this comes full circle, who do the bank statements go to? Guess what? The accountant gets the bank statements, and they will check the bank statements. So the person over here that is in charge of signing checks, they also can't write a check to themselves, because who would then notice later? The accountant would get the bank statement and say, hey, why did you write a check to yourself? So this is separation of duties. We are separating the records from the assets. And let's say another example is, let's say we got cash from our sales in the store today. And so this person, let's say this is the cashier, could have, they have the cash in the drawer, and however, they don't have access to the records, meaning if you scan something across the barcode scanner, the cashier cannot change what the computer has said is going on. So the computer says, hey, this is how much cash I should have. So the cashier has the cash, but they don't have access to the records. So if the cashier takes some cash out of the drawer, guess what? The accountant would notice, because when they look at the records, say, hey, this is how much money should be in the bank, and that much is not in the bank. Well, guess what? We know to go to the cashier. Or when we are preparing the bank deposit for the day, the accountant comes up with all the paperwork, says, all right, this is how much is supposed to be in the bag going to the bank, and then they give it to somebody else to, or they work with somebody else to take it to the bank. So the person in charge of the bank statements and all the records should not be the same person handling the cash and actually putting it in the bank. If you have access to both the cash and the records, it's very easy to hide your tracks. So we don't want to give the same person that much authority. All right, so let's go back to, well, what happens if you can only afford to hire one person? This is like churches, nonprofit organizations, small businesses. Guess what? Churches and nonprofit organizations are rife with embezzlement and fraud because of this very issue, that they can't afford to hire multiple people to handle things. So some of the biggest frauds and embezzlement schemes in this country have been nonprofits and churches. And you want to be able to trust the people that are handling your donations at churches. But guess what? It's a little too tempting for some people, and other nefarious people might wiggle their way into churches and nonprofit organizations because they know it's so easy to steal. So in cases of small organizations like this, what can you do? You can't separate all of the duties that you really need to. You might have one accountant, and then like the pastor or the president of their organization or the owner of the small business. So the owner of the small business has one person that handles all of this stuff. So what can the business owner do? They don't have time to do all of this stuff. They don't have time to do all the records, the bank statements, print all the checks, and mail the checks. That's why they hired someone to do that, because they're doing other things. So the number one thing that a small business owner can do to make sure that they're not being embezzled from is to pay attention. Perhaps they'll take one duty on, like signing the checks. They might not mail the checks, but they'll sign the checks. Also, pay attention to their financial statements. Small business owners especially know if something's wrong if they look at their income statement or their balance sheet and they say, hey, this number doesn't look right. So usually the number one thing that experts tell small business owners to do is pay attention to your financial statements. Review it once a month. I would say the same goes for a nonprofit or small nonprofit or a small church. have someone, higher up that knows what is supposed to be going on, and just check on it once in a while. Check those financial statements. Look at the bank statements once in a while. Make sure that everything looks good. I was a clerk for a church for several years, and the procedures that we had in place were we always had 2 people counting the money. We never did that by ourselves. So, and we always had 2 people take it to the bank. I thought that was overkill because you don't need 2 people taking it to the bank. As long as one other person knows how much is supposed to show up in the bank, and then it doesn't show up in the bank, well, kind of obvious what happens. But we always had 2 people go to the bank to make sure that no funny business was going on. So another thing that you can do, especially when handling cash, is never do it alone. So always have 2 people handling the cash. There are multiple ways to set this up. And again, an organization might not have the people and the resources to do it perfectly, but you can do other procedures to make up for your lack of employees or whatever. So, all right, so separation of duties is probably the main procedure that we would talk about here when we talk about internal controls. And it's basically do not have the same person handling the records and the assets. So make sure those are separated between 2 people if at all possible.